Hello, all viewers. Hope you all are doing good. Once again, welcome to our program Corporate Tax Series with SRS. As we all know that corporate tax will be applicable for the financial year starting on or after 1st of June 2023. So, are you prepared for corporate tax? So, for that reason, we have come up with the second episode, how to gear up for the corporate tax. Yes, all the businesses in the UAE have to start for the preparation of the corporate tax now. But the question is how? So let us start this. First of all, be ready to adapt the changes. We have to make our mindset to accept the taxes in the UAE. So now corporate tax and VAT would be parallelly complied by all the businesses across the UAE. Yes, the corporate tax is very much different from VAT. As I told you in my previous video, by nature, corporate tax is a direct tax, whereas the VAT is an indirect tax. And provisions and law of both the taxes are quite different. And yes, we have to register for the corporate tax even though we have already registered for the VAT. So how to start for the preparation for the corporate tax? The first thing is required to understand the law. Government has drafted the law in a very simple language. So each and every provision has to be understood in a very much way what the government is trying to convey to us. We have to understand the intention of the government as well as of the law. For this purpose, we have to visit the website of Ministry of Finance as well as Federal Tax Authority, where the updates are, for the corporate tax are published regularly. So the law is already, as we know, published on 9th of December 2022. Now the supporting materials are also going to be uploaded by the Ministry of Finance as well as FTA. First, understand what is the tax period. So, for the corporate tax, when it would be going to be applicable for you, you have to define what is your tax period. So, currently, for the tax period of your business is there. For example, if you are following calendar year, I mean, then your tax period would be calendar year. So in that case, January to December, your tax period would be for corporate tax purpose. For example, if you are following financial year, say April to March, then your tax period would be April to March for the corporate tax. So government has not defined the tax period, what you have to follow. It is up to you and what you are following up till now. So that period you have to follow, and accordingly you have to file the return for that period. A registration of the corporate tax has already been started currently by the FTA, but that is only for some limited big businesses. Actually, FTA is sending the invitation by email for the registration by those big businesses only. But we have to keep watch when your registration has to be done, when the window will be opened by the FTA for the registration. And of course, return has to be filed once in a year. It's an annual return, unlike VAT, where you are filing quarterly return. So you have to check your deadline when your first return would be due. So for example, as I told you, if you are following the calendar year, January to March, in that case, your first tax period would be 1st of January 2024 to 31st December 2024. So if that period is there for you, then your first return would be due as on the 30th September 2025. That is the 9 months, completing 9 months after completing end of the year. So your year is completed on 31st December 2024. So from there, 9 months. So 30th September 2025 would be your due date. By that, you have to file your first corporate tax return. Now, what about the branch of LLC? Question would arise whether you have to be registered separately your branch, you have to file your corporate tax return separately for the branch. Then it is very much cleared by authority that branch is not a separate entity, and hence there would be no any separate registration for the branch. Also, there would be no any separate corporate tax return to be filed for the branch. But yes, when you are doing the registration for your headquarter, or I mean your main branch, in that you have to mention how much branch you have and the trade license number of those branches. So at the time of the registration, you have to disclose all the details of your branches, and there is no any separate return to be filed for the branch, and hence you have to consolidate your financial statements. Of course, there will be consolidation for head office and main branch. So your head office main branch would be filing a single return consisting both the financial statements of head office as well as branch. Now there is one article in the corporate tax law, Article 61. It's about transitional rules. So as I told you in my previous video also, that this transitional rules is so much having importance for the application and for the first time implementation, rather I would say, for the corporate tax. So let us see what the transitional rules actually tell us. Clause 1 of the Article 61, a taxable person's opening balance sheet for a corporate tax purpose shall be the closing balance sheet prepared for financial reporting purpose under accounting standards applied in the state on the last day of the financial year that ends immediately before their first tax period commences, subject to any conditions or adjustment that may be prescribed by the minister. Clause 2. The opening balance sheet referred to in clause 1 of this article shall be prepared taking into consideration the arm's length principle in accordance with Article 34 of this decree law. So still there are another couple of clauses for the transitional rules, but I am considering these two clauses being having the importance to understand for you. So what does this mean? So let us understand. Year 2023 would be a base year for you. So coming to that, my previous example, if you are following the Gregorian calendar year as your tax period, that is from January to March. So your first tax period would be starting from 1st January 2024. So in that case, what would be the opening balances as on 1st January 2024? So government has come up very clearly, as I told you in the previous clause, you have to prepare financial statements for the previous year. So what is the previous year? Previous year is your 2023. So for the period from 1st January 2023 to 31st December 2023, you have to make the financial statements, and those financial statements has to be made as per the accounting standards generally applied in the country. So normally what we are following, IFRS. So you have to prepare your financial statements accordingly. And one more thing, you have to consider arm's length principle while preparing these financial statements. So as I told you in in my previous video uh, regarding transfer price rules and arm's length principle. So what is transfer pricing? Again, I will tell you in brief. The transfer pricing means wherever you have any transaction with your sister concern company, rather either sales or either purchase or whatever in your nature, you have to have check whether all these transactions are done at market value, right? So because there is the relation, if you are making such transactions either at a higher value than market price or at a lower value than market price, then it would not be the case. You have to mark all the transactions at the market value. So you have to prepare these financial statements of 2023. As I told you in my example, okay, all the closing balances, what you derived in your financial statements in your balance sheet as on 31st December 2023 would be carried forward as an opening balance on the 1st of January 2024. And also government has told us in the law that those balances would be accepted as an opening balances by government. So this is what the one of the, I would say, most important provision we have to keep in mind for this year, and we have to start preparation currently, and we have to give the priority for this purpose. Going forward, again, transfer pricing rules. I would like to mention some more about transfer pricing rules. So when transfer pricing coming in the picture, you have to understand the concept. Concept is that what I told you, okay, there is the related party, there is the connected party. You have to identify the transactions. So first of all, for the 2023 itself, we have to make this exercise. Why? Because as I told you, law has asked us to prepare this financial statement of 2023 by taking into consideration of the arm's length principle. So you have to check, you have to identify who are your related party. You have to identify who are your connected person. You have to analyze all the transactions between related party and connected person, and you have to ensure that all those transactions are at market price. Yes, this is also important. Transfer pricing would be applicable not only for the international transactions, it's also applicable for domestic transactions also. So you have to check both way. If you have some, a sister concern in UAE, then you have to again check whether you are doing business with them. Yes, which transactions, what is the value, you have to check. If you have any sister concern outside UAE, same concept, you have to check whether you are doing business with them, yes or no. If yes, then what is the transactions and what is the value of those transactions. So this way you have to apply the arm's length principle in your business activity with related person or say connected person. Related person means it should be your, in your blood relation. It's having a very broad definition. In the subsequent video, I will also try to cover down what the transfer pricing rules and what is the definition of the related party, connected person exactly, so that you can understand, okay, what does it mean. Moving forward, prison entities. If you are in prison, then how you will start the preparation for the corporate tax? So government has clearly told in the law that prison entities will be having the corporate tax at 0% rate. So that means that prison entities have not to pay corporate tax. Although all the prisons have to be registered with the FTA, all the free zones have to be filed, have to file their corporate tax return also. But the provision is for the 0% tax rate. So free zone entities would not be charged to corporate tax provided some conditions prescribed in the law, and those conditions, if to be complied by the free zone person, then that free zone person would be called as a qualifying free zone person. So what is a qualifying free zone person? A qualifying free zone person is a free zone person that meet all of the following conditions. Here please mark the word all. So you have to, being the free zone person, has to satisfy all the following conditions. Then only you will be called as qualifying free zone. And if you will be qualified as a qualifying free zone person, then your taxable income would be applied at 0% corporate tax rate. That means that you are not required to pay the corporate tax. Now let us see what the conditions are there. Number one, maintain adequate substance in the UAE. What does it mean? Adequate substance means you should have the proper, physical setup, or say manpower, or actual activity. As we all knowing that sometimes free zone license are taken by some person only for some billing activities or something like that, which is not actual. So government is asking us, you will be, yes, provided benefit, but provided you are also doing the actual business activity. So here, first condition is adequate substance. Second is derived qualifying income as specified in cabinet decision. So what the law is telling us, being the free zone person and also being as a qualifying free zone person, you have to earn only qualifying income. Now, what is the qualifying income? Still, we are not clear. Government will come up the separate, executive regulations for the free zone, and then only we will understand what is exactly the qualifying income. But right now, what the law is saying us, if free zone person, or other say qualifying free zone person, if earning qualifying income, then only that exemption of 0% would be available to them. The next condition is comply with transfer pricing rules and maintain the relevant transfer pricing documentation. So again, transfer pricing would be in the picture, even you are in mainland or you are in free zone. If you are in free zone also, then also you have to comply the transfer pricing rules, and you have to maintain the relevant documentation for that. So that is one of the main condition, I would say. Fourth condition is that not have made an election to be subject to corporate tax in full. What does it mean? It means that by virtue of the the corporate tax law has provided one option to free zone person. They should either go with the 0% tax rate, or they may elect themselves as a regular corporate tax person. In that case, if they are going to be elected as a regular corporate tax person, then the exemption of 0% tax rate would not be allowable to them. In that scenario, free zone person would have to pay the regular corporate tax at 9% of the taxable income, subject to that threshold limit of AED 375,000. So coming back to these all four conditions, because it is very much clearly told that all of the following conditions have to be satisfied: adequate substance, qualifying income, complying transfer pricing rules, maintaining transfer pricing documentation, and that free zone person has not elected as a regular corporate tax registration. So in that case, this free zone person would be considered as qualifying free zone person. Now adding one more thing with this qualifying income, still we are not clear. We are waiting from the government side to come up with the executive regulations so that we can understand exactly what is the qualifying income. But in case there is non-qualifying income, it means that if the conditions are not satisfied for the qualifying income, then in that case, those income where the conditions are not satisfied would be regarded as non-qualifying. So in that case, corporate tax would be applicable at 9% of that non-qualifying income. Understand? So this is the main principle for the free zone, main regulation for the free zone. We have to keep in mind all these basic conditions to get the exemption at 0% rate if we are in the free zone. As I told you, all the free zone entities have to register for the corporate tax, irrespective of qualification. I mean, irrespective qualifying free zone or non-qualifying free zone, you have to have registered for the corporate tax. Yes, all the free zone entities have to file corporate tax return, even though you are exempted at 0% uh, corporate tax rate, even though you have to file the corporate tax return. Tax rate would be 0% on qualifying income, as I told you. For the non-qualifying income, tax rate would be 9%. Still, we are not clear, as I told you, which is the qualifying income and which is not the qualifying non-qualifying income. So let us wait for the executive regulations to be published by the authority. And free zone entities, as I told you, there is an option that they can elect. They can elect themselves as a regular corporate tax person rather than to get the 0% corporate tax advantage. It depends on how your situation is that currently and what the planning you are going to make in the future with all these circumstances together, combining all these circumstances together, you have to decide whether you have to make the election for the corporate tax regular registration person, or you have not to make any election. So these all the things are we have to keep in mind. Still, some more points are there for the preparation of the corporate tax, like uh, how the accounts department we have to uh, to be followed, and how the accounting department has the responsibility to come up with all these things. Also, there is one more provision is there for the GAR. It's called a General Anti-Abuse Rule. So that provision also we have to keep in mind while making the preparation. So all these couple of points we have to keep in mind, and for that we will again come up with a video so that you can understand how to make the preparation from that point of view. Uh, so here we are going with some another point, that is small business relief. So the law is specifically provide for small business relief. Now, who is eligible for this relief? Any resident judicial person or individual in the UAE is eligible for the small business relief. Now, what are the eligibility criteria? So number one, revenue should be below the threshold limit to be defined by the minister. So let me tell you first of all what is the concept of this small business relief. Actually, government has come up with this small business relief for SME as well as for startups. So for them, Government has provided specific reliefs like that. If your turnover for a particular year, if less than the threshold limit, still we are waiting from the government side to what should be that amount, what should be that threshold limit. So if that condition if satisfied by your business, then you will be eligible for the small business relief. If your turnover is less than, or if your revenue is less than, then that threshold limit, then you will be eligible. Also, minister may come up with some other conditions that also we need to check one by one. And if all these conditions are to be satisfied, then you will be eligible for the small business relief. And if you are going to be satisfied all these criteria, then for this purpose, you have to make the application to the FTA. It would not be like that automatically you will be, considered it as a small business, or it could not be like that automatically you will be granted those reliefs. For this purpose, you have to make the application to the FTA, and then that application would be processed and later on may be accepted by the FTA. If so, then what reliefs you will be available? Simplified compliance. Government is asking that if you are eligible as a small business, then the compliance with regard to corporate tax would be simple and straightforward. The second relief and the most important relief is no maintenance of transfer pricing documentation. So for small business, there is no any requirement to maintain transfer pricing documentation. I would say this is one of the major reliefs to be availed by the small business. So these are the criteria you need to check for yourself, whether you are a free zone person, then follow whether you are qualifying free zone person or not. If you are, startup or SME, and as and when the government is releasing this threshold revenue, then you have to check whether your turnover is below that threshold limit or not. But for all these things, one thing is very much clear: okay, you have to have prepared your financial statements for 2023 so that you can continue for the next year with those balances and with that base as prescribed in the transitional rules. So I will come with another points in the next video for accounting records and accounting division, how to be organized, so that you can understand how to make the preparation for the corporate tax in this year. Further, if you have any query or any questions, then you may put your questions in the comment box. We will try to cover it and we will try to reply it also. And if there is anything, you can send us also email, or you can contact us on our mobile number displayed on the screen at any time. Thank you very much for your kind patience. Thank you. See you soon again.